Good morning, everybody, and welcome back to Beat the Bell. Happy Friday. It's been an awesome week of trading. Hope you all have done well. The S&P futures pulling back just a bit this morning, down about 14 points after yesterday's 90-point move higher off of the 40-70 lows. Incredible rally that the Bulls put in place yesterday, just when the Bears started to get excited. But that's the nature of earnings season. To talk about yesterday's trading and to talk about what we can expect today and moving forward in the markets, we've got a loaded panel starting with Sal, Money Mander. Mander, good morning.
Good morning, everyone. Yeah, 4 mega earnings down and SPY still stuck in range, pinned to 410. But we're getting some intraday volatility, which is nice. We'll see what the markets give us today.
We may be stuck here forever. We're not going anywhere. Diamond Trades, good morning.
Alejandro, what's going on? Like you said, a lot of news yesterday. We'll definitely be sure to break that down on Fed forecasts.
Ramsay Rippers, good morning to you. Think we're having some technical difficulties there with Ramsay Rippers. There you go, brother. Good morning to you. And Stock Snipa.
Good morning. God bless America.
GBA. All right. Right into Fed forecast, as Diamond had previously mentioned. Diamond and Mander, what do you guys got for us?
Yep. Let's start it with the economic calendar. So today we just had actually core PCE come out just a few minutes ago. So that core PCE number we will talk about in just a little bit, but we've also got UMISH sentiment that comes in at 10 o'clock. So we've got a little bit more news to go for this week. Core PCE month over month came in at 0.3 versus 0.3% expected. So basically in line with expectations. We also got personal spending just now, 0% growth month over month versus negative 0.1 expected. And then personal income rose 0.3% versus 0.2% expected. So that's the news that we just got, more or less in line. That personal income number is a little bit elevated, but everything more or less came in line with expectations as far as today's news. Yesterday, though, we got some interesting news that was not in line. So yesterday we got the first quarter of GDP that came in at about 1.1%. Q1 GDP was released showing that the economy grew at an inflation-adjusted and a seasonally adjusted 1.1% in the first quarter versus 2% estimates. So we missed the GDP estimate by about 0.9% there, which is also down from 2.6% in the final quarter of 2022. That 1.1% growth was due in large part to a frenzy of consumer spending, especially in January, as consumers dipped into their savings and took advantage of higher wages. We talked about that wage inflation that was really picking up at the start of the year. It seems like consumers used that opportunity to increase their spending, and that's exactly what we saw in January. And so that actually gave us a bump in GDP. Personal consumption expenditures in Q1 rose about 3.7%, which is the fastest increase since 2021 and a 1% bump over Q4 of 2022. The PCE index was also up 4.2% annualized in Q1, well above that Fed's 2% target. So the Fed actually likes to target that PCE index, try and keep that near 2% when they're talking about inflation. We actually got 4.2% annualized in Q1. So we're heading in the right direction, but still not quite at the Fed's target. Higher and stickier inflation, along with elevated interest rates, have really caused businesses to pull back on CapEx by delaying or cutting projects and headcount. And then the weak spot in Q1 GDP was lower inventories, which cost us about 2.2 percentage points to our GDP as businesses prepare for weakened demand going forward. So, Mander, mixed signals with a weakened economy with 4 double beats by the mega caps that have reported so far.
Yeah, mixed signals for sure, and kind of an odd reaction by the indices, at least I think for what people were expecting going into earnings season, right? You expected if we saw Microsoft, Google, Meta, and Amazon all double beat, we should easily be trading at 420, right? So what's going on here? Let me cover Amazon that we just had yesterday. So Amazon off the initial release yesterday saw a 12% rally immediately after the double beat. Top and bottom line revenues came in at $127.4 billion versus 124.5. So right around a $2.9 billion beat in revenues. And EPS came in at 31 cents versus 22 cents estimates. Rallied 12% immediately. And then after the earnings call, actually flipped all the way to red and is still red here in the pre-market session. So what happened, right? If we were looking kind of under the hood here, AWS Cloud Services accounted for 5.1 billion of their 4.8 billion in operating profit. So realistically, all other business ventures cumulatively accounted for a $300 million loss on the quarter, and AWS revenues alone brought them, and AWS profitability alone brought them to a profitable quarter. So while AWS was up 16% year over year, it also marked the 5th consecutive quarter of slowing growth since it peaked at a 40% year over year in Q4 of 21. So kind of, if you're looking under the hood, right, as Amazon's business model here, AWS was the big driver for this company really over the past, I guess, 2-3 years here. AWS itself peaked in revenue growth, now going down from 40% to 37%, all the way down to 16% growth year over year. And the rest of the entire business model here is unprofitable. It accounted for a $300 million loss on the quarter. And then the CFO also noted some trends in consumers opting for cheaper products this past quarter, as I think is kind of evident. We saw GDP growth slow. We're starting to see these recessionary trends start to trickle into the economy. And now people are opting for cheaper products, driving less revenues for Amazon's storefront. And then forward guidance came in at 2 to 5.5 billion for operating income in Q2, and the expectation was at 4.75 billion. So that puts that number in that upper 25th percentile, probably not what investors were wanting to see. So I don't know, right? I kind of wanted to pose it back to you, considering we saw these massive beats across the board from the 4 megas everyone was watching going in here, and we're still stuck to 410. You know, what's it going to take for that next leg higher? Or do you think the strength that got consolidated in the top of this rally from really the top 10 of the S&P 500 is now getting used as exit liquidity after earnings, and we start to see another leg down?
Yeah, it's interesting because we talked about whether or not these names would beat, and you have to remember, like, the whole weakened demand, lower margins on products. It's not like these companies were unaware of that, right? Like, I mean, we've been talking about that since January. These are some of the best companies that the world has to offer, with some of the smartest people that the world has to offer, and they've been prepared for this, right? And so we've seen the Metas of the world, the Amazons of the world, cutting costs since like late last year, mid last year. And so I never really was super concerned about bottom line beats. I think as far as revenues go, it's been surprising to see, all 4 of them beat, but at the same time, the guidance going forward hasn't really been great. And then, like you talked about, when you look under the hood with Amazon, basically everything outside of AWS as a whole was losing money for them. So I've seen a lot of questioning, exactly how we're still in this range, how we're sort of staying up here after the earnings really came in. Although all 4 double beats, a bit lackluster, A, in terms of guidance, and then B, in terms of, like you said, when you really look under the hood of these companies, it's going to be interesting to see how the market wants to react going forward. I mean, we've only got Apple left as far as large cap or mega cap earnings. So it'll be interesting to see how the market wants to respond. It seems like everybody, again, is looking for that next catalyst that's going to send us, out of this range, whether it's the upside or the downside. First, it was earnings season. Next, it's going to be FOMC, which we've got next Wednesday. Next, it's going to be the CPI after that, right? So it feels like the market is always looking for that next thing as an excuse to rally or dump. But I think in reality, the market's going to do what the market's going to do, and you can't try and fight, or at least you can't think that the market is wrong in their reaction to these earnings, because I feel like that's where you start to get in trouble, where you get emotionally attached to the stock, after the earnings. Usually it doesn't make sense, right? You have to just leave it alone, follow the price action, and give it a day or two, and things will sort itself out. So at least that's my plan going into next week, after these earnings, and with FOMC and Apple next week. So it should be interesting.
The street's going to do what the street's going to do. And yesterday marked a month straight of trading between 405 and 415 in SPY. So something's going to break us out. What is it going to be? It's up for people to guess, because earnings certainly weren't it so far. That'll wrap us up here. Back to you, Alejandro.
All right, guys. Awesome stuff there. I'm going to go ahead and share my screen. We're going to take a look at the system. So Yesterday, we had a landscape change. What does that mean? We got the buy signal. So we had previously been talking about how we were trading above the hourly 50 SMA for quite some time. We had to go all the way back to March to see the last time that we were trading below the 1 hour 50 SMA. That was until, of course, early this week. We got the breakdown below, the market chopped around a little bit. Then finally, we got, after the 30-minute chart had given the sell signal, a sell-off. Okay, so yesterday we climbed back up. We reclaimed the 50 SMA on the 30-minute chart. We get the buy signal. We reclaim the 50 SMA on the 1 hour chart, and the bulls regain control. So now coming into today, very simple stuff here. Reason again why I love using the system to kind of get that bigger picture idea for where momentum is. Are the bulls in control? Are the bears in control? The 50 SMA losing that level was very important for the bulls because once they gave up the 50 SMA, the market sold off. So now on the reclaim, again, bulls are back in control. But if you are planning on trading today, very important to remember that yesterday in ES, we got a 90-point move off of the lows. Now, I am of the belief that it's very important to take advantage of those moves when the market just rips with no pullbacks or it sells off with no retracements and you get that really strong trend. I think it's important to take advantage of those moves. But if you can't, or if you did not, the following day or days are typically more difficult to trade because the market now needs to cool off. We're clearly extremely overbought after ripping 90 points. Okay, so the market has to either, there's two things that can happen here. We're going to come down, we're going to test levels of support, we're going to start to base, and we can look for a move higher. Or we come down, those support levels don't hold, and the bears are right back in control, or we just continue to rally really hard, which by the looks of it this morning doesn't seem to be the case. But what I'm trying to say here is that it's a lot more difficult to judge what's going to happen after the market makes this large of a move higher. So again, I'm of the belief that it's very important to take advantage of those moves because trading in the days to come is more difficult. And if you can't or did not take advantage of the move, it's important to be very, very smart. If trading today, I would size down because, again, more difficult trading environment. And you don't want to come in with expectations that what we saw yesterday is going to continue into today. What I like to do is I like to give price a day to figure itself out. I want ES to tell me which levels are strong levels of support, which levels are working as strong levels of resistance. And then there's always next week, there's always Monday. And luckily yesterday, being in that long all day, which I'll talk about later on in the show, I don't even need to trade today because I was able to take advantage of that rare, super strong trend move. And I'll explain what I was looking at yesterday again later on in the show. But that's going to do it for the system, guys. Going to pass it now to Ramsay Rippers for Bet the Bell.
Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
All right, good morning, guys. Wednesday, red day. Let's check the stats. Ryan, pull it up for us.
Sliding into the 2 spot.
Tight race.
Half game
Super,
back.
super tight race. Snipe is over 500 now. Congrats, Snipe. All right, let's do it. Amazon earnings yesterday. Today, I believe, did Energy report. I believe they report after the bell. We got names like Chevron, Exxon, lots of energy names today. Let's get right into it. Green or red today. Indices are slightly down about 0.25%. What do we got today, Hondo?
I'm going to go red today.
Red. Diamond.
I will go red as well. Red.
Mander.
I'm going to take green. I think we see some continuation in the end of the week here.
Snipe.
I'm going to have to take red. I think we might have a little pullback after yesterday.
All right. So a little recap so far this week. Microsoft, Google, double beat. Meta, Ripper. Amazon, double beat, but a little bit red, right? I mean, we saw it go from like 105 to 123 now, back red. We got Exxon, Chevron today, some of the energy names but it's in specifically the mega tech names just really having a great earnings, really a great show out. I mean, I don't know if you want to call them mega, include Tesla, but those names as pictured. We got Apple next week. These double beats on these mega tech names. Is this just, a little delay in the incoming or pending 2023, 2024 recession, or, are we completely past that? What do you think, Hondo?
Oh, sorry. You're gonna have to repeat that, brother. I was sorry. You're gonna have to repeat that.
I thought you were frozen. No. So this mega cap tech earnings, these double beats, is this just a delay in the recession, or are we thinking SPY all-time highs?
Oh, well, I mean, if you're asking me the question, hashtag SPY all-time highs. Throughout early this year, I think it's been pretty clear that, I've been leaning to the bull side, but realistically, I'll be honest, this entire earnings season, I have actually done something that I've never done in the past. I removed like alerts from a lot of the news sources that I follow, and I actually, quite honestly, have no clue what these companies have been reporting. I haven't tuned into any of the earnings, and the reason I've done that is because I didn't want to develop bias coming into each and every trading day. So that being said, from what I've heard here on Fed Forecast, we've seen some double beats across the board. But I mean, who's to say? Earnings season comes and goes, and to me, it's something that gets quickly forgotten, and it's just important to follow the price action, which is what I've been trying to do.
Fair. Diamond.
I think, and we talked about it just now, it's going to be interesting to see how, because this whole recession that everybody's sort of been waiting for has just been put off. And I think, at least in Q1, we saw that a lot of that was due to the consumer strength, particularly in January with, hot labor market, higher wages, increased spending. That's really ultimately what's going to be the decider, right? Is going to be how well the consumer can hold up over the next several months into the summer. Seasonally, spending increases in the summer. And so, I mean, people were expecting Q1 to be the trough in earnings. And so if that was the trough and we got 4 double beats, it doesn't look too bad. Like if that was the worst of it, which is, again, that's what the forecasts say it should be. If that was ultimately the worst of it, I just don't see how we return to some of these lows, whether it's December lows or October lows, without some sort of catalyst on the forefront. I mean, we have plenty of news coming up next week, and so there's not to say that there can't be some sort of event, some sort of catalyst, but I don't know, man. It's really tough to see us returning back to those levels without something happening, right? I mean, we've like Mander said, we've been in this range for so long, and everything that people thought would send us out of it to the downside or whatever, the market's held up, and so we'll have to see, what we get. I think it's got to be something unexpected because so far the news objectively has been pretty good.
So,
yeah, to Diamond's point, it's going to take something unexpected. And we've been talking about this really since we started the show. Historically, the pain has come in the market after the Fed pivots off of rate hikes, not even a pause. And so I think, at least from where we're at right now, things are still kind of going to plan, right? The Fed is still likely going to hike rates one more time and then pause in June and then hold a pause for as long as they can. The pain typically comes after they have to pivot because that means they've overcranked the tightening and something breaks. And so right now, until something breaks, like the decreasing, well, recession alone, right? Recession is an economic term. And so that would just mean the GDP is shrinking. We did see that. It still came in positive yesterday, but it halved the expectation. It came in at like 1.1 versus 2.3 growth. So we're definitely starting to see that. But if recession is priced in already, what the stock market does is totally different. You know, we could have a recession and still not see lows. But between all-time highs coming up soon or lows, I would still put my money on the lows. I think it's just going to take some time to see this pan out.
And Snipes.
I think the bottom is in, and I think the Bears are squeezed. I think they're getting squeezed really hard. No, I'm messing around. I just want to see Sal's face over there in that little corner.
All right, like why does everyone think I get angry at this?
Because you hate stocks, man. We all know this.
Oh my god.
Don't worry, Mander. That what was your PT, like 2,800? Still coming inbound.
22.
Did Mander rage quit?
I think he did.
Wow. Yeah, but back to the question. I think honestly, I think we are delaying the recession. I don't see an all-time high coming in the next couple of months, if you ask me. I would love to see that. Don't get me wrong. That would be really good. I would be jumping for joy, but I don't really see it, to be honest.
Well, I want to do the math real quick. What's the all-time high? 470, 480, 479.
Yeah.
I mean, we're 13.5% off of those all-time highs on SPY. I believe that we're probably honestly the same off the lows. 16% off of the lows. So technically, we're closer to those highs than we are to the lows. The interesting thing, real quick, and then we'll end this segment. The interesting thing is, Microsoft is into these crazy new highs. Meta into just an absolute rip fest continuously. These new highs. Google not there completely. I believe Apple is like just about 10%, 10, 11% off all-time highs, but they've all been steady increasing over the last 6 to 8 weeks. SPY is still stuck within this really this like 4050 to, or excuse me, SPX 4050 to 4150, 4160 range. It is interesting with these mega cap names, these top 5 to 8 market share and holdings in the S&P 500 completely just ripping and taking out their recent highs. How SPY has kind of stayed around, chopped in this sector. They're going to need some more follow through within the financials and the broader market outside of these mega names to really see those all-time highs. I believe it's just pretty interesting to me. Microsoft already over 300. SPY still hasn't really budged. I know that not one name's going to do it, but we'll see what happens next week with Apple. I believe Thursday before the bell. So that's kind of my take on it. Snipes, thanks for being a dick. You kicked Mander out, man. Feelings.
Man,
That's going to do it for
I'm still laughing at the fact that I just was sitting there with a blank face. What the hell was? I thought it was.
I thought it was. I
didn't know I was on.
I thought everyone was frozen.
No. Oh man. All right. Let's go into the last segment. Trade of the week.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
All right. Ryan, if you could go to the next chart. So yesterday, took a long at the open. Really important. The first thing I want to talk about here is the rocket scooter chart. So we had a BLU setup, which is a bull long up. So look at the liquidity map here. We were trading in the bull zone, okay? And hedge pressure level was at 407. So when you're trading the bull zone, hedge pressure is expected to serve as support if below, with resilience positive and DD greater than a half as well. And that is exactly what we saw yesterday. So long right off of the open, trading ES at 41.15 was where I took my first trim. And then I took yet another trim at 41.26. And then the last trim I took was at 41.42. That was my exit. So about 41.45, which was 42 points on the trade. But coming into yesterday, again, super bullish setup on Rocket Scooter off of the open. I took it, moved cleanly through that bull zone, absolute money. And yeah, that was yesterday's trade, and that was by far the trade of the week, guys. So that's gonna do it for this morning's show. Really appreciate you guys tuning in. We're gonna be trading live today, as we do every day in the Kane Capital Discord. You guys can go to kane-capital.com to trade with us. Thanks for watching, and have a phenomenal weekend, everybody. And
wait, real quick. This is probably my mistake because my computer was going crazy, lagging during Fed forecast. But I'm not sure if you guys mentioned it. XOM already released earnings, double beat EPS and revenue, slightly less profit than Q4, but double beat. So we'll see how that plays out when the market opens.
Thank you, brother Ramsay. That made the show right there. All right. See you guys on Monday.